Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Robert Blake, CEO of Acronix, to discuss enabling technology for data acceleration. Robert, it's great to have you with us. Welcome to Trade Talks.
Yeah, Jill, thank you very much for inviting us to join you today.
You got it. Can you start by providing a brief overview of Achronix Semiconductor's history and your business today?
Yeah, absolutely. We are a fabless semiconductor company that's based here in Santa Clara, California. The company was founded back in 2004, and the company produces a series of chips that are used mainly in infrastructure equipment for a broad range of data acceleration applications. And those could range from compute workloads, high-speed data networking, wireless infrastructure, and more recently, autonomous ADAS applications for self-driving vehicles.
Can you explain what an FPGA is and how the market has changed over the past several years?
Yeah, an FPGA, it stands for a field programmable gate array. What that really means at a high level is that the chips are programmable. When our partner TSMC manufactures those chips, they're essentially blank, and it's the customers who create their innovations and customize the chips using our software tools for a range of different applications.
How does Acronix differentiate itself from other FPGA companies?
Yeah, we differentiate ourselves mainly in that we go after a high-performance segment of the marketplace. What we've done is essentially we've blended two technologies together. The benefits of programmable logic, meaning its ability to change and adapt, and we've fused that with essentially high-performance custom logic designs that gets you the highest levels of performance, but the lowest cost and power consumption.
What are the target applications for your high-performance FPGAs? Do the use cases or markets differ for your FPGA devices versus your embedded IP solutions?
Actually, yes, they do. The chips that we produce, which are standard product chips, mainly go into infrastructure equipment. Those would be things like compute acceleration in either the cloud or the edge, high-performance data intensive applications in things like computer acceleration. If you look then at the applications, the chips also go into high-speed networking, where transportation and switching of high-speed internet streams. Conversely, when you look at our IP portfolio, and this is a business where we license the technology for other people to use in their chips, that would go into applications including autonomous vehicles. And so the combination of our technologies of either standalone chips or our licensed IP model enables us to go into a very broad range of different applications with one common theme. Those applications all have very high bandwidth data sets that all need to be processed with very, very low latency.
How large is the global market opportunity for high-performance FPGAs, and what is the projected growth rate?
Yeah, this is quite exciting. Today, I would say, if you look at 2022, the global market for FPGA technology was just over $8 billion. And if you look 5 years forward, that's expected to grow to about $11.6 billion as a worldwide market. And that growth rate then is almost 8.5%. We're choosing to focus on a segment of that marketplace, which is the high end. That market segment will have much faster growth rates for applications like compute, high-speed networking, wireless infrastructure applications, and autonomous vehicles. And there we see those growth rates above 10%. And so that presents an exciting growth opportunity for our new products.
Can you share with us an overview of your revenue margin profile and the key drivers of future growth?
Yeah, what makes us unique is that we do combine two businesses. So the first of those is that we sell these high-end chips that go into infrastructure. Those tend to have higher gross margins in that kind of 65 to 70 point range. And then we combine that with a IP licensing model where the customers that we license the technology to manufacture, so we bear no manufacturing costs. That's a much higher gross margin business. When we blend those two together, that puts us in a position where we will be have not only high growth but high profitability, and that puts us in a very unique position in the marketplace. We're the only FPGA provider that provides both high-end FPGAs and licenses its technology.
And finally, Robert, any plans to go public in the near future?
Yes, we're very excited to start preparations to enter public markets. Obviously, we look at the current market conditions and we'll follow those closely. But we've started our preparations. The company has reached a scale where we think that public markets would be the next logical step for us. We're going to be ready, and as soon as the market conditions look favorable, we'll be looking to join the public markets.
All right, Robert, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino.
Thank you for the opportunity.
You got it. Global Markets Reporter at Nasdaq.